So let's talk about tariffs. Now, probably already seen a lot of videos and news reports and everything about tariffs, but a lot of the stuff that I've seen has, either some sort of political bias one way or the other, or they're not talking really about what we care about as market participants. So, what I'm going to do is I'm going to try to break it down simply and understand that I am Canadian, so I don't really care one way or the other what happens down there. I'm looking at this only from a market and a market commentator and a trader standpoint. So let's see if we can clear some of this stuff up. So first of all, again, a tariff is imposed by the country on the buyer of something who buys something from outside of their country. So it's the biggest thing to put in. A lot of people think that when you're tariffing, the other country is paying for it. That's just absolutely not how it works, right? So we're going to use the example, I think, of wood, because I live in Canada. We have a lot of trees, not a lot of people, so we sell you guys a lot of lumber. So at no point will Canada hand over a check to the US for selling them wood. What happens is, if I'm a home builder in the US and I am buying wood from Canada, I have to pay 25% tax on it. So if I'm buying $1,000 worth of wood in America, I buy $1,000 worth of wood and I walk away. If I buy $1,000 worth of wood from Canada, I have to pay the US government an extra 25%. So that same amount of wood, assuming the price is the same, is going to cost me 25% more, or 1,200 bucks. So the reason that a country does this is to say, if we make the outside country's stuff more expensive, then there's a greater it incentivizes people to buy locally, right? Maybe the Canadian wood was a better quality or cheaper before, but now that we've tariffed it, it's not cheaper than what we're selling internally. So you can go and buy it from a local type person. So that's good for the producer of lumber inside the States because they get to sell their lumber. Generally speaking, they'll jack up the price anyway. So it ends up evening out, which is just funny. It's just the way the markets work. But that's essentially what's happening. So it's not from country to country, it's the business who buys the good from the business in the other country that pays a tax to the US government. So what ends up happening is, you better believe that if the home builder has to spend more to build the home, they're going to up the price when it comes to the individual person, right? If I am building a home and that home I'm planning on selling for $500,000 and making 200,000 from the sale, and all of a sudden my cost of goods, my lumber and all that has gone up, I'm just going to jack up the price of the house because I still want to make my 200 grand. So what happens is, and this is what this chart kind of a little bit convolutedly, I think, explains. What happens is the end consumer pays more, just the way it works. Now, whether that's worth it for the long run is up to the politicians that do this stuff and the people who voted them in and all of that. So we're not really going to comment on that. But the one thing we know is that tariffs drive up costs, and that will drive up inflation. And it has to happen that way. Why would a company be buying Canadian wood if the US wood that was produced was as good and the same price? They wouldn't. They would buy the one that's closest to them. They don't have to ship as far. So the fact that they're buying outsourced materials means that those outsourced materials are either higher quality or better price. It's economics 101. So when that gets taxed, that will hurt the consumer by raising prices. So what you're hoping is whatever gain you're looking to get is going to offset that higher price that the individual is paying. So I just want to really hammer home that inflation bit because it will come into what I think is actually driving these moves a little bit later here. So the next thing is why. So the top chart here just shows that about 80% of what we make up here in Canada, we sell to the US, and then same with Mexico, selling up to the US, right? We have a lot of land and not a lot of people. So we mine the things that we have and we sell them to people who need them, and vice versa. However, that makes up about 30-ish% of what the US buys. So it just means that the US has way more leverage on, upping the price or putting on these tariffs to ours than we do to theirs. So essentially, it becomes a big negotiation tool, right? I can hurt 70% of your economy, and it will only hurt my 30% of my economy. So I'm hurting you more than you're hurting me. So again, it's a trade war, right? It's war without guns. So the question is, what do you want in exchange for that? If it's purely a, I want people to buy things locally, then there's nothing you can do. But what we saw recently is that in exchange for some tighter border controls or something to that effect, he's already lifted the tariff on Mexico for a month. So it shows that these are just negotiation points, right? It's not to, buy local stuff necessarily. These are, I have this leverage. I'm going to implement this leverage on you. I'm going to use this leverage in order to get something that I want, at the cost of inflation. So that's what comes to this chart right here. So this is the last time we had a trade war, and we also had this kind of inflationary back and forth, what will the Fed do thing during 2016 to 2020. After this, the Fed has been really like flat out, this is what we're planning on doing. This is, we're going to raise rates this much. It's been very transparent from this point on. But before then, we had this. So the reason I talk about interest rates is because that's how they battle inflation. If they had a plan to cut rates, say, another percent this year, right? So that's what was happening behind closed doors at the Fed. We're gonna, let's cut another percent. We'll do it, blah blah, throughout whatever. Well, now there's a fear that the inflation numbers aren't going to rise, and if inflation numbers rise, maybe they slow or stop when it comes to Fed rate cutting. So we say, hey, we're not going to cut prices anymore because we are worried now that prices are going to rise because if there are tariffs, we know that will cause inflation. So that's what causes this little back and forth is now from now until we see some talk from the Fed, things are a little bit more nebulous, I guess, is a good way of putting it about what's occurring. The main thing I wanted to point out with this chart is that yes, we had these sharp corrections last time. Anyone traded 2016 to 2020 remembers this. You had a tweet would come out and the market would rocket like 3-4% one day, and then a tweet would come out and the market would tank. So we had pretty harsh corrections, pretty harsh bounces from those corrections, but just increased volatility. So the market generally grinded up over time. This was a pretty ugly Christmas. You can see this happened right at the end of the year here, but the market still grinded up over time, right? It was up in this period, insane action, up in this period, some more insane action, and then up before. Let's just ignore the pandemic because that's just not what we're talking about in this little bit. So if we know that this story that we've heard before, this was all caused by interest rate uncertainty and trade wars, if we have a playbook now, so we know potentially if this is going to happen again, how we can play it. So what does this end up meaning for someone like yourself who trades or someone like me who trades systems? Well, the first is if the market's going to be choppy and crazy, if you're somebody who doesn't have a plan to deal with that, maybe your strategy is just buying things as they're breaking out. Maybe your strategy is looking for a trend continuation in big cap names or strong names. It's going to be a rougher market because what you may have to do is change your breakout parameters and understand that if we're going to have this chop, then by buying breakouts, you may be buying short term tops. Maybe you size down and look to follow a trend. Trends can still exist and they can be really, really choppy or they can be really, really smooth. In this case, it looks like the trends may become much choppier. So that's one way. That's one thing that we have to deal with is these choppy, crazy trends. If you're someone like me, and what we do over at StatsEdge Trading Pro, which you can check out in the description and my bio, or just go to statsedgetrading.com. It's right there in the middle of the homepage. Is I trade different systems. I have trend following systems, I have investment type systems, and then I have mean reversion and pullback systems. These are designed to play off the volatility and to actually benefit from the volatility of what we see on the other side of things. So that's my plan is I'm going to lean a little bit more on those systems that do a good job of buying things when they come down and then selling them when they pop back up, playing off the volatility, and then a little bit less on the trend following systems. And I've said that a few times before the election. I was doing that. Again, there's certain times where certain systems work. So if you're someone who can do that and you can develop, or say you already have a system that buys things as they're dipping and sells them as they're ripping, That's if I'm right and we do the same thing that we did last time. Those are the systems that are going to be advantaged. The slow trend following ones are just going to be a little bit harder. So, right, understand doesn't mean the market has to crash, doesn't mean we need to have this prolonged bear market or anything like that. It just means that we are probably in for a period of increased volatility. And if we are in for a period of increased volatility, then it makes sense to adapt our trading accordingly. So, I hope this helped. Just a simplified breakdown of what tariffs are, how potentially they could trade, and I hope it's just not the 10 millionth tariff video you've seen today. So, uh, if you had any advantage here, or if you want to trade in systems like I do, and you want access to these systems that are mean reversion in nature or pullback in nature, again, go to statsedgetrading.com, check that out, and I will talk to you guys in the next video.